So I use order flow to overall help me with my entries. The first week of January, I was very much on a losing streak, and journaling has helped me a lot in terms of backtracking why I saw success, how I saw success, and it was through utilizing the order flow chart. And in this video, I'm gonna break down basically what I did and what I saw to catch a little over 26 points in profit on Friday, January the 16th on the S&P 500. So obviously higher time frame, price action wise. I saw a lot of things that gave me confidence to take this short position on the S&P 500, but specifically speaking, when we were opening up during New York, we were a little bit choppy at this area right here. Now, obviously, if I was not using order flow, I would not be able to see what is basically happening within the market. And obviously, we chopped a bit and then we broke structure. We had a change of character and we came down to sweep these lows. And eventually, we hit these lows right here, which is the nearest level of resting liquidity. But through someone that doesn't use order flow, maybe you either would have had not the best entry, or you would have missed the move completely, or you would have gotten in and gotten stopped out. Now, the reason why I took my position were multiple reasons. I'm going to first break down the volume profile. So for those of you guys that do not know, the volume profile is basically a tool that I use just to show me who and where volume is basically being confirmed at. So who's in control and where is it happening? So obviously we have three major points on the volume profile. We have something called the value area high, the point of control, and we have the value area low. And then obviously from the value area high to the value area low is where basically 70% of all the moves happen within the market. So you can see that basically in this area is where the biggest moves were in that specific day of trading. So what I was noticing is specifically one thing. So I'm gonna show you how I coordinate both the volume profile and the delta footprint and obviously price action. So we had a huge volume cluster right here, meaning we had a lot of aggressive orders being pushed out to the market. Now, what were these aggressive orders? These aggressive orders were basically red. They were selling orders, which was showing me that we had aggressive sellers into the market, coming into the market. We had a consolidating phase right here. We basically topped off at these lower highs, and we saw all this aggressive pressure coming in, and on the higher time frame we were losing structure from bullish pre-market to obviously bearish in market. Now essentially that was factor number one. Factor number two was, well, actually factor number one was price action. Factor number two was a volume profile. I was seeing aggressive sellers coming into play. Now, reason number three, my apologies, why I got into the sell position is because of the delta footprint. We obviously were printing very negative overall. This candle was I think it was 13.67 million contracts executed favoring sellers. This one we had something called a delta divergence, meaning that we have a positive amount of volume coming in, but we have a bearish candle being printed. We also have something called a imbalance right over here, where basically 300% more sell orders were put in this specific area compared to buy orders here. So that was obviously a huge thing for me that I saw that caught my attention. Another thing is that we closed below this imbalance at 1.9 million contracts executed for sellers. Again, this was showing me that sellers were being accepted. So price action shows me what's obviously already happening and already occurring. Delta footprint shows me whether the move is a fake out, an acceptance, an absorption. Like, what are we seeing in the market? So that's what I like. That's why I like to use the footprint chart specifically, because it shows me exactly what's happening within the market. Now, we had something called a delta diversion. Like I mentioned, we had a negative candle printing. We had a positive delta being printed as well, meaning buyers were injecting volume in the market, as you guys can see here. And why were they doing that? Because they wanted to protect price here and push price higher to take out these highs. But obviously, sellers were basically absorbing all of the buying pressure, which basically led us to this candle. So again, what happened in this candle? So as soon as I saw this specifically, I got into my position with very high conviction. Again, on the higher time frame, we were rejecting the lower highs. We were already rejecting lower highs here. We had a large volume cluster here. We had sellers absorbing all of the buying pressure. We had an aggressive imbalance here for selling pressure, and we had a candle closure below this imbalance, which is an official actual fair value gap in the market and based on order flow trading. So this again gave me the confidence. So I got into this position. I placed my stops right above these lower highs, giving me an entry at about 69.96 and a stop loss at about 69.70. On my MetaTrader 5, it was about a 4.5, five point stop loss, which obviously, the spread makes it a little bit more compared to MetaTrader, compared to TradingView, my apologies. Now, again, second candle prints at 940, right? We print that exact, we print out a next candle. Now this, we have a sharp move to the downside. Now, basically, let me change the colors. I think it's difficult to see it. Okay, perfect. Yeah, boom, right here, we have the exact same thing. We have a positive delta. Again, buyers are trying to push the market up. They're trying really badly to push the market up to save all of the selling pressure that's coming in and being absorbed. So what happens? We have a delta divergence. Again, we have buyers attempting to push market up, but sellers are activating absorption and they're absorbing all of the buying pressure. We have a imbalance right here, right over here at 1.06 million contracts executed for sellers, which is 300% greater than this order up here at 137K. Then we have another imbalance right here at 5.36 million contracts executed for sellers, opposed to this, which is 1.6 million contracts executed for buyers. We saw a closure below 1-2 imbalance, which was again showing me that sellers were ultimately in this position. Now, again, since we had aggressive buyers or a good amount of buyers here as well, both candles, we had a small recovery phase up here that pushed price up here. Now, this is where, some people that aren't using order flow, would have been faked out, or they would have been like, you know what, I'm not going to get into this position. But in reality, it's a great opportunity just to re-enter or get an even better entry if you got in somewhere here. You could have gotten up here to get a better R multiple. Now, obviously, the reason why I decided to hold this position was, again, we had the aggressive selling pressure on both candles before, and overall we were still seeing that bullish reaction, that bearish reaction. Now, the only thing that, for a moment got me to think, hey, you know what, this might be a situation is that we had a stacked imbalance right here. But we basically had this massive drop right here. We had a huge gap right here. Why? Because we had aggressive sellers still holding their position, and I knew it wasn't going to be enough buying power. If this candle was to close above, not right at the imbalance, I would have been more inclined to maybe close my position early, because at this point I was already up maybe like 4 to 5 points. The following candle, we had an aggressive amount of sellers. Obviously, you guys can see here, very dark colors. So on the Delta footprint, how I have it activated is that whenever I have dark colors, is basically showing me we have aggressive sellers pushing the market. Now, overall sentiment was bearish in terms of price action. Everything was looking bearish. We had engulfing candles. We were having small retests to fair value gaps were basically here. And these retests were just a better confirmation for prices to go lower. So again, I wasn't like fearful, because again, I knew what was being printed within every single candle, and it didn't really affect me. Now, obviously, Another thing that I did like is that when we printed this candle again, negative 4.48 million contracts executed. It was all aggressive selling pressure here. And this was right at the high volume node right here. So obviously I was still seeing aggressive sellers. I was seeing selling pressure, selling pressure, selling pressure, which was giving me the confidence to hold my position to these levels. And the reason why I essentially was targeting this area specifically because this is where we had our value area low, which is a key area in the market. Now, why did I basically um, hold my position a little longer was because I was just trailing my stop loss. And, we happened to come all the way down here. And then I had my stop somewhere up here. And then when we came back up, it just stopped me out at about 26 points in profit. I lost like 2 points, which is nothing crazy. But the whole point is that I took this position based on order flow. I saw a overall absorption from buyers. Sellers took it really well, and they just pushed price back down. I saw a massive activity of selling pressure here. Price action was giving me breakout engulfing candles both on a 3, 5, and 1 hour time frame, which is showing me that we were very, very solid. And also on the 1 hour time frame and the 2 hour time frame, we had a bearish shooting star at the high, reversing from this specific lower high area, which we were sitting at about 69, 66. 69.66, 69.67, which was giving me confirmation that price was looking to reverse. And all I basically did, guys, is I looked at, okay, what's price action printing, what's order flow printing, and what is the volume profile printing. And with that, I was able to have a very tight stop loss with a very good R multiple. I believe in this position it was a 1 to 7 with my trading view. On my actual MetaTrader 5, it was a 1 to 6.5 risk to reward because obviously spreads. But regardless, it was still a fabulous setup. And all I did is I basically utilized the volume profile, the delta footprint, and obviously price action both on the higher time frame and on the lower time frame, which gave me the confidence to take my absolute position into this market. I know this looks confusing, but I promise you guys, it's actually very simple. And this is something that you want to overpower. It's something that you want to use as confirmation. I don't just use this blindly. I use this as a confirmation tool as well, based on price action, because you just looking at price action, you're just seeing 10% of the move. With order flow, you're seeing 90 to 95% of the move. You're seeing why moves are happening because price action just shows you when a move happens. Indicators just show you when a move after it happens, or yeah, when it basically occurred. Order flow shows you while it's happening in real time. So that's why I like using it. And it's helped me a lot in my trading. Last year, I went on like on a 7-month winning streak. I had losses here and there, but overall, in a 4-week span, I never had a losing week. And the moment that I decided to deviate from it, that's when I had a losing week. But I'm grateful that I deviated from it summer of last year because it helped me focus on understanding price action a little bit better. But now when I am incorporating order flow with price action, it just gives me the utmost confidence into my setup. So hopefully, guys, this video brought you some value on how I was able to capture a 26-point position on the S&P 500 and what I'm going to be using for the remaining of the year. I'll see you guys in the next video. Don't forget to like, comment, and subscribe, and peace out.